Miami-Dade single-family homes. What's the setup? How are they looking going into 2023? So, as I prefaced the condo market update, it is very important to recognize that we're in a period of increased polarization in our country that I think is going to play out over the next 5 to 10 years. This is polarization of belief systems, wealth gap, and now, since COVID broke habits, we're being accelerated into life reshaping largely around the capabilities of the internet for those who can. Remember, our current setup, work-life models, city infrastructure, all that stuff was established 20th century, post-World War II, before internet. So the world always evolves, and now we're in a period of change, I believe as substantial, if not more so, than the period directly after World War II. The country's reshaping. Now, I'm a big fan of looking at census and IRS data to quantify this wealth and talent migration, and as luck would have it, last week the Census Bureau put out 2021 to 2022 estimates. And they show, once again, that the pattern has continued. California and New York were the biggest losers of population, and Florida and Texas were the biggest gainers. Texas gained some more people, but we had the largest percentage gain. So again, Texas and Florida are 1 and 2. But remember, Florida is receiving more of the high net worth movers. We had, I think it was 2020 to 2021 data, we had over 20,000 households that filed over $200,000 a year relocate to Florida. Texas had something like 5,000, so 4 times fewer. So we're neck and neck with Texas for sheer population, but we seem to be getting more of the high net worth people. And that reality is very much reflected in the numbers that we're going to dig into. So let's start with median pricing. And again, I made a matrix of 4 essential parameters that form our framework going into 2023. So starting with median pricing, again, let's remember national news by definition homogenizes data. It takes the overall country and it shoots out a median or an average, and there it is. But again, we're in a period of polarization with divergent realities across the nation. So while the rest of the country or parts of it may be having drops in pricing, we as of yet had not. In fact, to me, it seems that we're plateauing around this new post-COVID reality. So let's look at median pricing. Year over year, and again, this is data through November, single family homes are up 10. And if we look at pre-COVID, they're up 51%. That means pre-COVID November, the median price was $365,000. November 2022, it is $550,000. That is a very significant increase in a short period of time. So keep that in mind when the news reports little small month over month movements. They are not as relevant as looking at the whole cycle because nothing ever goes up in a straight line, and there's seasonality in real estate, all that stuff. So again, nothing goes up forever. We're up substantially since pre-COVID, and it's normal that that increase is going to subside. Okay, let's look at supply on the supply side, active listings. And here it's very important to divide the sub-million and over $1 million market, because the over $1 million market is where we're seeing the action precipitated by the wealth and talent migration. So below $1 million, inventory is down 45%, almost half. That is very, very significant. This is the segment of the market that is going to be at a standstill moving forward. It is the part that relies most as a percentage on financing, has the fewest cash buyers. So we have people who bought in a few years ago. They're going to have very low interest rates compared to what they can get today. Inventory has dropped. They have fewer choices if they wanted to move and stay in the area, and they'd have to pay much more for the same type of house they're in. So it's kind of a lose-lose. So we're going to have this continued standstill in that segment of the market. Over $1 million, inventory is relatively flat versus pre-COVID. It's down 3%. Year over year, up 58%, which is not a bad thing because demand is substantially higher at that market segment. So while we are down 3% versus pre-COVID for over $1 million on the supply side, on the demand side, sales volume measured by number of sales is up 145%. Meanwhile, sales volume for under $1 million is down 20% versus pre-COVID. Again, that drop is less than the drop in supply, but it is a drop nonetheless. And again, that segment will be affected by interest rates, by all that stuff. So that makes sense. Now, where it really gets interesting and most shocking in its growth is when we dig into sales on a price per square foot basis. And if we isolated higher prices per square foot, we can really see how the higher echelons of the luxury market are performing. If we look at sales of single family homes past $2,000 a square foot, we see a 750% increase versus pre-COVID. That's 8.5x, everyone. That's very, very shocking. It went from 10 for all of January through November of 2019 to 85 in January through November of this year. That is a whole asset class that has been created, and it reflects the demand of the incoming wealth and talent migration. If we look at sales between $1,000 and $2,000 a square foot, they're up 528%, having gone from 58 to 365. And to put this in perspective, we have more sales today over $2,000 a square foot than we had in 2019 between $1,000 and $2,000 a square foot. And I know for myself, I've done studies of land sales, dry lot, single family sales, and land sales in Miami Beach. And dry lot land and single family are getting higher prices per square foot than waterfront used to not that long ago. And if you believe the thesis that the country is reshaping in this new post-internet reality, and that Miami is at sort of the vanguard, and that we're in the early days of the city's development, buying prime single family land, a house, whatever, in the urban core today is like buying a brownstone or a single family home by Central Park in New York City 100 years ago, before the city takes off. You're locking in that land value. And I think we're seeing that reflected, the recognition of that reflected in that 750% increase in sales of past $2,000 a square foot. So let's look at all cash. All cash, we have 22% below $1 million and 52% over $1 million, which again correlates with the fact that we have the largest drop in sales volume below $1 million. That segment would be most affected by interest rates. And again, by just the sheer friction of not having any other place to move. That over $1 million segment is people who have to move in the sense that they feel they have to relocate themselves away from their home jurisdictions. And again, our feeder jurisdictions cannot help themselves. Momentum is a real thing. Trends in motion tend to stay in motion. And I predict that our feeder jurisdictions, domestic feeder jurisdictions, are only going to keep increasing their hostilities to capital. We're seeing this, of course, with California's mansion tax, which comes into effect April 1st. And I believe the crime upticks, I don't think are going to go away in all these places. So I think we've just begun, since early days, of the wealth and talent migration and the reshaping of the country. And look, everyone, change is our only constant. Remember, in 1960, Detroit had the highest per capita income in the country. Obviously, that is no longer the case. London was the capital of the world before New York. Before that, it was Amsterdam. Those cities are still there, but there is a shift in focus. There always is. Changes are only constant. And it just behooves us to recognize where the flow is going and to position ourselves sort of to, be there on the upswing wherever it is, because there's always an upswing and it always goes somewhere. So I think South Florida is one of the recipients of this migration of talent, human initiative, pursuit of the American dream, whatever you want to call it. That's actually one of the things Ken Griffin said that drew him to South Florida, was that he feels that it's a place that people are now coming not just to retire or park money, but to pursue whatever to let their entrepreneurial spirit flourish and pursue their vision of the American dream. So I think this market has some floors there with the massive drops in inventory and the high cash buyers. There's going to be some gridlock below $1 million. Over $1 million, I think, especially past those $2,000 per square foot marks, that demand has held strong versus last year. And again, that reflects that incoming domestic migration. I think that's going to stabilize around this new normal, this post-COVID normal, because this year those sales are pretty much in line with what they were last year at those high per square foot prices. So I think 2023 is going to be a year of stabilization around a new post-COVID reality. It's going to be a great year in South Florida. The cold freeze up north is not going to hurt us either. All right, wishing everyone a very happy new year, and stay tuned.